Hi, everyone. This is Mish Schneider from MarketGauge.com on behalf of your Daily 5 with StockCharts.com. And it's been a while since I've talked to you all, and there's a lot going on in the market right now. So even for my own edification, having taken a little bit of a break, I wanted to go through not all of the economic modern family characters, but the three main ones, and then the long bonds and the gold. So we're going to really call this right now market at critical intersection. I'm going to show you the daily and the weekly charts, and I think you'll see why. And if we actually either fail at these levels, which is very possible, or hold and continue up at these levels, why there will be so many different opportunities as we get into the positive seasonals, and of course, always the big hope that the Fed's going to do some kind of pivot. So what we're going to cover today is XRT, which is retail, my granny, IWM, grams, IYT, transportation, SMH, semiconductors, because that's a big key here as well. The long bonds, not necessarily the short bonds, and of course also gold, which has been consolidating after making some big gains, and where that might go. So let's get to the charts. So let's start with XRT, our granny retail. Obviously, we're coming off of Black Friday, and it was very mixed. The brick and mortar did not do very well, but the online sales made a record. So, of course, the big question is, was this already in the market? And that's why we saw a rally off the lows over the last few weeks. And now this is a sell the news type, the actual reality type of event, or whether this is just taking a big giant pause because of all of the different factors that we have coming up with the Fed meeting and unemployment numbers, China situation, etc. That's, of course, what we don't know, and that's why we love the chart so much. So I have a weekly view and a daily view. On the weekly chart, you can see that once Granny went back over that 200-week moving average and took out that Bollinger Band here, that was really the nice move from 62 to 66. But man, it was almost so aggravating because it's taken a while. It's taken 3 weeks to get to these levels. And now that we're here, we're really into some resistance based on the inside week. First of all, I have to get through 67.55. Then you're going to have your 50-week moving average at 69. And then you're going to have your second Bollinger Band at 71. But that wouldn't stop me necessarily from being a buyer if we can at least get through the highs here in terms of the outside week high at 67.55. Now that's the weekly chart, so that's a little bit different. We'll take a look here in a moment at the daily chart. In terms of the leadership against the benchmark SPY, it's showing some leadership, so that's good. But what concerns me here is in the real motion indicator. We are not anywhere near over the 50 or the 200, and we're just sort of getting over the zero line, but not with any kind of great momentum. So at this point now, it's suspect. What I really like here on the daily chart, of course, is that we got right up to the 200, just like we've done before. Here was August. We didn't even quite get up there. But, you know, what is concerning here is we're starting to get sort of lower highs. I mean, here was a high. I wouldn't necessarily say that this was a high because it was just kind of gathering some steam after this big drop off. But I would say this was a high, and now this could very well be the high. So the question really is based on what we saw on the weekly chart, that 67, and you figured a little bit of fudge of 67.50. If we can get through that, that looks great. Otherwise, it's very possible that we can see a move down to about 64. Now, on the momentum indicator down here, we'll look at in a moment. Obviously, on the leadership indicator, we are also outperforming here, but we haven't quite gotten to the peak in terms of the leadership that we had even when the highs or here lower where we're kind of trading now, which means the leadership is even waning. And on the momentum, although we've had some good momentum here, and we're over both of the moving averages, we're running right into the zero line. So when I say we're at an intersection, basically, if we can't catch a rally and get over these key levels in granny retail, I would take that as fair warning. Now let's move to Grandpa. And let's move to Grandpa over here so we can look at both views. And again, very similar in that it looked pretty awful down here and then cleared the 200, tested it a few times. And now we're getting, not only did we have an inside week from last week, we're still inside last week's range. So again, intersection, we don't know. 188, I would really say 190. If we get through 190 in IWM, small caps, that would be a really good indication that we're going to have more rally and a healthy rally, because that's really the crux of the US economy. Obviously, you can see this is underperforming now, the benchmark, which is key. You don't really necessarily want grandpa to underperform the SPY. And the momentum never really got going, just like we saw in the retail on the weekly real motion and actually under the zero line. Now, once again, in this case, wasn't so clean. We actually got through the 200 day. That's why these other weekly moving averages are so important. You need multiple time frames. And now, of course, we're back down below it, closed right on it on Friday. And now here you can see we're selling off a little bit. Well underperforming the SPY, which, considering that IWM was really the catalyst to lead this rally after this big sharp low that we saw in October, this is not a good sign now. If you look back in October, it was having leadership, and even though it broke it briefly, now it looks like if we break down under these lows, that would be dangerous. And the momentum indicator is still relatively strong, though, so that's giving us some level of positivity here, thinking that if this is just kind of a weakness day and we can hold above 182, 183, that's a good sign. Obviously, 190 is what we'd be looking for on the upside. Next, let's take a look at IYT. Now, IYT, once again, we're going to look on both time frames, because you can see if the daily breaks out, oh, excuse me, that's not what I meant to do. I was moving over here. Sorry about that. Okay, so on the weekly chart, another inside week, another move back over the 200-week moving average. And also, obviously, you can see into some resistance, starting to go on par with the leadership of the SPY. And momentum, again, stronger than what we saw in the other two, but still not really all that great yet. On the daily, this never got through the 200-day moving average. It's amazing how good that is. So if you coordinate that with the 50-week, this is a little bit higher at 236. This is at 231.46. But at this point now, you really have to say above 233 would be like, wow, we are really going to go much higher. Right now, all we have still is a rally to resistance. The best news about IYT, of course, is that it's the demand side, and we want to see it remain robust. And also, it's showing leadership against the SPY. And in this case, again, good momentum, not quite over that zero line, which it hasn't been above if we really started to look back here since April. I mean, that's how long we have to go back to see when this thing was really showing not just good momentum, but great momentum. So finally, on the Modern Family, let's take a look at SMH. And with semiconductors, this is really also important. We know many rallies have been led by the tech. And in the last rally that was led by small caps, the tech finally caught up. And of course, you can see what happened. It had a great rally as well. But the problem, of course, is that the tech, we know, it has a few issues. One, obviously, being China and the Apple sales and Apple phones with the shortage and the protests that you're seeing there. So right now, Apple is actually down 2% on the day. But also, obviously, interest rate sensitive. So what the Fed's going to do next, and that's going to be a lot what happens with the labor market on Friday. But again, inside week, another inside week, some support here. My feeling is if this breaks down under 212, that would be a really big warning to the market. On the flip side, if we can get over 230, that would be very positive, on par in terms of leadership. And again, momentum over the zero line, but not over the moving averages. If we move to the daily chart, once again, that 200-day moving average has just been amazing. It just goes to show you how the family all has to behave together. IWM had broken out over that 200, remember I showed you, but Granny and transportation and semiconductors did not. So you really want to see them all behaving the same. So right now, that 212 to me would be key. And if it breaks down under that 212 level, which is really right here, I wouldn't be surprised to see this back down to 200. Now, again, good leadership. We'll see how long it lasts. And again, not bad momentum, although it looks like the momentum peaked last week and now it's coming off. And again, not through the zero line. So the last two things I want to show you here would be TLTs. because we've had a year that's unusual where the bonds went down when the market went down. And usually bonds are a flight to safety. What you haven't been able to see here, but I'll show you where it is a very interesting weekly chart point. Now, you can't see it on this. This is a Bollinger Band. This isn't a weekly EMA. But on my charts, on the weekly EMA on TLTs, 103.85 is worth writing down, because 103.85 is where the EME is, the 17-week EME, which this has not been above in over a year. So we can say right now that the TLTs have been some flight to safety, but maybe not. Maybe just a rally based on A, very oversold conditions, and B, on some sense that somehow people still believe the Fed's going to pivot, which we don't see at this point happening. So unless we get over 103.85, I would be very cautious. This is still underperforming the SPY. The momentum, maybe we'll start to see some kind of mean reversion, but right now we can't say that. This is all on the weekly basis. And on the daily basis, yes, we got through the 50, but we have some pretty heavy-duty resistance here, not only at the 103.85, but all the way up. We are outperforming the SPY, and our momentum looks good. So that's why I would be encouraged to watch this and kind of be on the sideline based on everything I've told you right now, and wait to see what the TLTs guide us to. Because if they can get through that number, bonds may in itself may be a good buy, but also I think that's where you would start to see some of these other sectors, particularly the semiconductors, have another leg up. And for the last chart here I wanted to show you today is gold, because we've been very, very bullish gold. Not so much for the type of inflation that people are talking about here, but more for the type of inflation based on chaos. There's a lot of chaos in the world right now, and we don't see that abating anytime soon. I call it looking for inflation in all the wrong places. People keep thinking CPI is going to crash, but meanwhile, statistically, CPIs take sometimes 6 to 20 years when they're over 8% to really reconcile. So besides that, we still see the possibility of conflict and strife throughout the world, and the dollar, of course, which I'm not going to have time to show you, at great risk with BRICS and a lot of the countries going with the Middle East here to try to figure out how to price oil in something other than dollars, which would not be great for our economy, but also would be highly inflationary. So here we have gold on the daily basis. It had this nice move up after basically an exhaustion bottom and major consolidation. So I'm looking for this to hold 160. If it does, and I would even say if we can get a close back over, say 162.80, then I think you have another low risk buy if you're not already long. But obviously you can wait for the classic signs like for it to clear the 200. It's still underperforming, and we still need to see the momentum get over the 200. On the weekly chart, sorry, this did not change. Let's change this here. To wrap up, on the weekly chart here, we see it above the 200 week, obviously below the 50 week, a little bit more on par in terms of performance. Having a mean reversion over the zero line, I think that that's an interesting sign on the momentum indicator here. And so that's why I look at this more as a pause and a consolidation over the key 160. And again, that means too, we're at an inflection point in everything I showed you. So trade carefully, know your risk, and don't mind having a little patience. If you've already taken a lot of profits from being in the long that we saw over the last few weeks, this is probably a good time to lock those in and not let your winners turn to losses. That's it for now. Thank you so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.